Bow. All right, what's up, guys? It's Spark and Trade. You're here with your boy Spark, and just wanted to give a quick market recap so that we can kind of just review what happened today in the market. It was an interesting day, and I give a lot of these recaps in my Discord, or in a Discord of a great friend of mine, LMD Trading. And I don't know if anyone finds value in it. You know, everyone has their own style of trading, their own reasons for analysis, etc. But for me, it's it's very methodical, very just kind of consistent, and I think we all kind of can benefit from just hearing each other's kind of perspective on the market. So, with all that great, good gobbly-goo being said, let's take a look at what the 4-hour market did today. Now, if you literally go into my pre-market analysis for today, I talked about what the market could potentially do. Now, this area up here on the 4-hour came in like overnight and showed us that 16,886 would be an area of resistance on NQ. Once we saw that, the daily really doesn't tell you much other than the money zone down here, which was not even a factor today. It wasn't even tested, and that's all right. But this morning, we knew that going into the open, if the market reached this level, 16,886, that we would get some smoke, meaning we should get a rejection from that level, only because that's just what we believe the market does. I'll show you a bigger picture. And if you've been with me for a while, you know that once we hit supply, which is this red line, market tends to move away from it, demand bounces, blah, 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 blah. So this morning, as the market crept all the way into this level, we were here somewhere. So only two things can happen for me. I think the market's either going to reject this level and come back down and have support at this green line, at this green cloud. Why this green cloud? Look at what happened the last time it bounced off of it. Look at what happened the last time it got in there. Even this wick is a potential kind of area to buy the dip in this bullish trend. So anyone who believed that this market dumped deep enough into these zones, they believe that is a discount and they could potentially get in for either a swing, maybe a quick scalp, whatever it may be. We don't really give a damn, but we do know that this is a high probability area for the bulls to step into the market. So when you look at the market in that perspective, right, like you're shorting up here or you're covering your longs up here. And if you short, you're covering your shorts down here somewhere into this zone. So let's go into the market a little deeper and see exactly how we played this today. So today, you can look at my actual live trading video to see how I executed today. I executed very poorly in my 100K account, got blazed up in the morning, and then I finally got my S together and finally decided to go with shorts, literally because of this. And I'll take it from the 1-hour supply. We know that this is a 4-hour supply level. The 1 hour also gave us a supply level. This is your 9 o'clock kind of candle into 10 o'clock. So all of this price action was the where you had to make your move, at least based off of whatever it is that you were thinking. So the same thing kind of applies. This money zone is where they're going to get a lot of buyers to step in to send the market up. So I'll just mark that level really quickly with that right there. And this green one is the one from the 4 hours. So just remember that, right? Let's go down. Here goes the 30-minute chart. 30-minute had us pinned in between these two zones since 4 o'clock this morning. So we came down, established demand, bulls stepped up. Mind you, this is your 1 hour money zone. So bulls stepped up, send it to supply. Bulls stepped up again, send it to supply. And it was just a ping pong game until somebody gives up. Now you can go with the bulls and make money to the upside, but once you get up here, you might want to think about covering because that's where supply is at, right? And this is all like this line has been there since like yesterday. So you're not coming into the market frazzled, not knowing what to do. This market's been there since like this line has been there or has been trying to establish itself since like 4:30. So we knew that this was the range to either get out of or bust a play from. Now it doesn't matter if you take longs. down here and take it to the supply, or shorts up there and take it to demand. What matters is, can you survive the BS that goes on in between before the move kind of goes in your direction? Now, we go down another time frame and we get a little bit more insight as to those levels. This up here is your 4-hour level, 886. Now we get into your 9. This move right here was your 830 jobless claim number. We went down, broke the demand. We had demand down here, and if you look at my pre-market video, I was actually trying to long this. Did pretty well the first time, made it up here, got out. Then the second time I tried again, this wick took me out. And then I believe I went back in when we were somewhere up here and rode the market to some profit up here. I did not stick around for this. So this is 9:15. I stopped trading the pre-market. The open happens, and here we are up here, right? Kind of determining whether or not the market's going to continue to bull rally or not. Now, let me tell you why. Aside from this being the supply level, I wasn't interested in continuing the bull run. I would if they break and hold that level, but until that happens, I do not long breakouts. So when the market gets up here, here's something that I noticed a couple days ago, and I told the chat, like, hey, listen, when we're at standard deviation 2, for whatever reason, there's a 97% chance that the market will return or pivot back into the, or kind of reject and pivot back into this pivot zone, right? Like, so it's a mean reversion play now. I do not think the market's going to go back down here. I don't know whether the market's going to go back down there. All I can tell you is I will play levels back up and down as it does, as it chooses to do, or move in any direction. Anywho, now that we established that we are at a high probability rejection zone, I love this short, right? If we go down to the 30-minute, same thing. We're at standard deviation 2. I love any supply line up here. And down here, we start getting into different weeds, right? The 15-minute chart shows that we are at a pivot, not necessarily at that high standard deviation. So how do you choose? Just go with the higher time frames. The smaller ones are going to, like, do what it does, but you can also use a smaller time frame. For example, when we got to standard deviation 2, we know that a high probability bounce is going to come in. In addition to that, we are also at a green 4-hour money zone. The 1 hour is down here. This is your green 4-hour money zone. Anywho, as the market unfolded at 9:45, we shoot up right into this 866 level. Didn't quite touch it, but I don't need them to. All I need to see is this type of wick price action, and that becomes my stop. So we get in at 844, meaning this price, 844, risking that 886. So we're risking like 40 points on this play. And the market did what we kind of anticipated it to do. Now, it was not an easy trade by far. This trade was hard because I'll show you on this 15-minute chart, when we were actually in it, well, I was in it, we started coming down and I never really saw drawdown. I knew that this area is something that we had to take out because we have demand here, right? From before, bounce, 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 bounce. So we had to take out that demand level in order to like really see some traction. So I wait, we break them. Here goes another guy that we have to take down. Not a fun experience when you're up like 100 and change. Nothing crazy, but if it was NQ, it would be $1,000. Anywho, we pumped back up. They took almost, a good chunk of what I made. And then finally they got the breakdown that I wanted. And I skirted out of the market really, really quickly, somewhere down here around 80s. 88, 89, 88, 90s I covered. So I covered somewhere right here for a total of about 55 points. The market ended up going 216 points. And this would be something that, you deal with as a trader, but my R&R was there. I ended up risking 40 points, made 55 points, so a little bit above 1R. And that's what makes, I think, trading for me an okay thing. Now, had I waited for another leg down, I would have had to dealt with this pump back up, which then puts us back into this demand zone. And if this demand kicks in, I'm going to lose everything. Now, that's a kind of a condition that you got to kind of think about for yourself in the market. But The market just kept on bleeding. We ended up hitting this money zone. Market comes right back down. We establish a demand, pump all the way back up into that red zone where we rejected this red line now, which has become a resistance. Once we hit that, big fall started happening. I actually call this out, and I'll tell you why. This area here, we'll move this. This area here is a 5-minute supply line that came in. It was a fresh one. So we're right here with the market now, right? This pump back up happens. We get the big dump. That's your next leg down. Then it literally pumps right back into that money zone. But a supply line came in, and I took a long right here and managed to get up there. Well, somewhere right here I got out. But I managed to get up there, and I'm thinking, wow, this market could really do that second half run up. But when this supply line came in, I said, no way. Not because the line is just there, but look, 1 hit, 2 hit, 3 hit, breakout. Once I see that breakout stop hunt, it's go time. And then as soon as I called it in the group, this candle was already down here. And I'm like, okay, well, maybe they bounce. Anyways, it just kept falling, right? They tried to establish demand. They finally got it. Another stop hunt to this demand zone, and then the market rallies back up. So, in the morning when I'm talking about possible plays to take, I'll tell you that I'm thinking, we could do the longs based off of that 15-minute demand, and it worked out. It played out. This entire move right here paid you enough for you to just walk away for the rest of the day. But the big move came from that 4-hour supply, that 1-hour supply up there that the market decided to reject. And it was a solid move because we were around the standard deviation 2 on the 1 hour and 30-minute. At the end of the day, I did see this possible bounce only because we approached the 4-hour money zone where you should see buyers step in. So we'll go to the 4-hour really quickly. That money zone has shifted a little bit, maybe to like right there. So this is where the buyer should step in. We broke below it, but look, a massive wick buys it back up. So there's this like stop hunt thing that happens right here. And then a wick right here tells me, oh, we might, pivot. And if you look at that wick on a 5-minute chart, you can see that it was this entire move right here. So how do you get into that move to possibly make money on the upside? Well, you can get in under this crossover, risking this swing low and going for 2R or 1R, whatever R's that you're comfortable with. But at the end of the day, this market did pivot way back up to the upside, and had a really good end of day experience there. So that's what happened with NQ today. I think ES had something very similar. Let's take a look at ES really quickly. Yep, ES had something very similar where it went into the money zone and then bounced. So supply is here on a 1 hour. Anyone who thought that this market was going to run up, they probably got trapped up there, and then this move down takes them out. They fueled, once they start breaking this level to a certain degree, it fuels the fire to the downside. So, we had a pretty nice pullback on ES from that extensive move that we had over the FOMC. Now, FOMC did move on ES, did not get taken out completely, but great opportunity there to short the market back down. Demand on the 30-minute came in, 15-minute came in, and the 5-minute came in for you to take the possible playback to the upside, and that was clean, right back into the 200 moving average. So very clean setup there, very clean play there. Let's take a look at SPY, although this probably is the same. Yeah, so SPY looks a little bit more difficult to trade, but it really isn't. You have supply up there on the 1 hour, a double top move, big drop after that double top, and the market just basically showed you could have played this demand level up to that double top, took that, break that down, possibly cover there, possibly cover here, and pivot in the direction, because this move right here is, you really don't see it on a 5-minute, but this is what it looks like on a 15-minute. So you don't want to stick around for that move to clap all your gains, even if you're a day trader. especially if if you're going to hit target. This is a solid 4-point move. I'll take that any day on SPY, especially SPX contracts. And the Qs is probably going to look like NQ. So we'll just take a look really quickly. Yeah, so here we go. Qs basically had a really shitty day today. Just kind of fell, bounce, fell, just like the NQ. All right. So, tomorrow's market, it's anyone's guess, obviously, but just looking at a possible overnight session swing / play that you can take, you gotta get through that money zone. You gotta believe that this money zone on the 4-hour is gonna cause a bounce, and it might take time because it looks like some supply is coming in right here. But wait for 6 o'clock, see what happens when the market opens, and maybe establishing a position down here for the move back up isn't such a bad idea, or kind of going with this trend to see how far down they want to take this market isn't a bad idea. Now, which one you take, it's up to you. But if I had to take a trade, honestly, I wouldn't really take it. Like, they done broke some rules that, like, I like the cyan to green combination, cyan to green, cyan to green. This is not the first time we went from cyan to red, but when I see this thing could do a full pivot back down into demand. Now, we do have 1-hour demand, so you can establish some level of some stop below this level and see what happens. Maybe the bull run continues, maybe it doesn't. But that is all I have for review right now on NQ. The market it's a healthy pullback, right? On a macro level, this is a healthy pullback for a continuation move, but this 886 is going to be a level to beat. This is not going to be an easy level now. And we do have support down here at 612. So, we had that bounce that came in with a wick. This might be a good indication to load up if we kind of hang around this level for a while and then we get another snap up. But I would not front run a long swing yet. I would, however, think about it if they pull back and this zone gets tested and shows that it could hold. But I wouldn't really want to see it back underneath, maybe 552 or anything like that. But yeah, that's all I got for you guys today. If you have any questions, shoot me in the chat. I don't know how your day was today playing the market, but my day was pretty good overall with NQ. We took shorts at supply. Wish I stayed for the whole move, but that's another story. To my current viewers, you guys had a good day in the market. Did you play anything in particular? Didn't really see anything. We'll take a look at CL is crude oil, and this is another market that I've kind of been looking at. Shout out to Axeman. He mentioned that this thing is at a discount. Probably debatable, but it has a solid move to the downside. Previous level where it bounced up at. We actually played this one day, and I'll show you that move in a second. But if you caught some sort of demand down here, you made a move that's worth, I think it's $1,000 for every point on CL. So from 68, 69, 70, 71, it's like $3,000 move if you swung that for like 3 days because it's been on a bull tear. Now, if we go into the smaller time frame, I'll show you what we saw that initiated this move. So on CL, 15 days, 5 days. On CL, what do we see? We saw this pivot. And we are like, okay, demand is forming. We might, could get a nice little rally to the upside. Trying to catch when that rally happens is probably not like it's not important, you know, like you don't want to see drawdown, nobody does, but if you wait too long, man, your entry is going to be somewhere up here. But you just got to trust something. So for me, I'm trusting that break of the down channel or the down move. So something like that, I'm getting in at the break of that, or something like that, I'm getting in and I'm making that. You know, it really just depends. But why not care about these supply levels? Well, you should cover some there, because who knows what it would have done. But when we broke, retested and held, that was another bull run that was pretty sick. So since Monday, or Tuesday, it's just been going crazy. But yeah, that's crude oil. If you guys want to see any other markets, let me know. Until next time, stay safe out there, guys.